Hey everybody, it's Jeff Beers here from 40 Finance, and I made a really fun discovery over the past few days while I was searching for options to invest in Chinese internet stocks. I came across the KraneShares KWEB ETF. If you have any interest in investing in Chinese internet stocks, this is definitely a great video. Excited to share it with you. Please like and subscribe to the channel. Let's jump in. Okay, so KWEB is an American traded ETF. You can get it on the NASDAQ. And I took this summary here from their website, and you see that KWEB seeks to measure the performance of the investable universe of publicly traded Chinese-based companies whose primary business is in internet and internet-related sectors. So this is right up my alley. I'm a holder of the FDN ETF, which is American-based internet companies. And I've always had a lot of interest in the Chinese internet stocks like JD.com, BIDU, etc. Really the concern or the uncertainty for me is sort of investing in standalone Chinese stock. I don't have a great grasp on the accounting principles in China, their reporting structures, and those things can make a big difference when it comes to overall performance of a company. I certainly understand the business models of most Chinese internet companies because they're not that much different than the United States. But I do start to get a little worried when you get into accounting principles, regulation, all those things in China, which are foreign to me. So I've always held off on investing in individual Chinese stock. But if you've been following the news, you know that Chinese stocks have got hit pretty hard since January or so, as the trade war rumors have increased. A lot of the popular Chinese internet stocks, like I mentioned earlier, BIDU, JD.com, things like those have all taken a real beating. So I'm getting sort of excited because anytime I see prices go down, I get excited when I know a company still has a bright future ahead of them. And that prompted me to search for a solution in terms of ETF, and that's how I landed here. This chart right here is also from the KWEB site. It gives you a comparison of the Chinese internet economy and population versus the American internet economy and population. And quite honestly, China is 2 times, 3 times bigger than us in all the major categories. The internet population in China is 802 million. US is 287. E-commerce market size in 2017, so a little year behind or so, but they have 1.14 trillion, and e-commerce market in USA is 433 billion, so a pretty significant difference there. Percentage of online retail sales in 2017, China was right near 20%, and USA was at 8.9%. And total mobile payment sales, which is definitely a future thing. That's the way transactions are going. The Chinese are early adopters. They already have $15 trillion in mobile payment sales. US only has 0.4 trillion. So you get some sort of an idea of why I get excited about the Chinese internet market. First of all, internet-based businesses is something that I have a lot of familiarity with. Being a digital marketer, I feel comfortable reading those quarterly reports and understanding what companies are doing. And when you see a market this big that's essentially on sale right now due to some economic factors, you have to get excited. And that's why I found myself searching for an ETF that would let me get a small piece of the biggest companies so that I didn't miss out on a potential to make a lot of money in the near future. Okay, so this is the KWEB summary page on Yahoo. You see that year to date already, they're up 18% from big time lows in December and January. You can see on the 5-year chart, this ETF is not that old. It's barely over 5 years old. Started in the neighborhood of, call it $30. as Chinese internet companies started to perform very well in the neighborhood of 2016 and 2017, it reached a high all the way up to $66, right? Which is $22 more than this price today. And then you had the decline, okay? So that's when you started to see, we all know at the top of the year, Trump and China, all the negotiations that are going on, people started to get worried too because there was some slowing numbers coming out of the Chinese economy as far as GDP growth and all those things. I personally feel that while GDP is something to maybe keep your eye on over the long term, when it comes to internet companies, it's a little bit different of a game because we're talking about things that people do every day in their life, okay? So BIDU is a search engine, for example. TENCENT makes mobile games and applications, things of those nature. While GDP would be a concern for maybe a luxury home builder or a luxury fashion brand, I don't know that it applies as much to internet usage and pastime activities online. Just my take. You see, we have had a little bit of a bump up to $44.57. It looks like the low was right around $38. So I sort of wish I would have found this a couple weeks ago, but nonetheless, we have plenty of time to get in here on a dip and see if we can make some good returns over the next 2 or 3 years without having to choose just one stock. The expense ratio for this ETF is 0.70. That basically means it costs you about $7 for every $1,000 you invest. So pretty much nickels and dimes. That expense ratio, if you're curious, is pretty close to average for most publicly traded ETFs right now. Okay, so let's look at the top 10 holdings for this ETF. You got Tencent, Alibaba, BIDU. I highlighted the ones that I'm most interested in. JD.com, Tencent Music, Momo, Weibo, and YY. So all those stocks that are highlighted here by me are the ones that I probably understand the most and have the most belief that they will have incredible growth potential, certainly over the next 5 years and probably much sooner than that. All in all, there's about 40 to 50 stocks in this ETF, and you can get the full list of holdings off of the KraneShares website. All right, this chart that I found on the KraneShares website is actually super interesting. It takes the Chinese internet company, so example Tencent, Alibaba, BIDU. It compares them to a US business. So Tencent, they compare to Facebook. Alibaba, they compare to Amazon. BIDU, they compare to Google. And it talks about the growth rates that these companies are seeing. So without going through every line item here, you can see that the 1-year average revenue growth rate for the Chinese components was 69%. And over on this side, the American component was 22%. Now, this is sort of a flashy chart for, investor presentations, but you get the concept here, and that is regardless of what line you choose out of here, regardless if you look at 5-year annual revenue growth rate or 5-year average growth rate, pick a company, compare it 1 to 5 years, it doesn't really matter. China's growing faster in terms of revenue, okay? We were lucky in the United States because Facebook, Google, some of these companies, Amazon, they've been around for a little while and they have already generated revenue for a significant amount of time, right? So the time to get in low, if you will, on Google and Facebook was 5 to 7 years ago. You can still make good money. 22% average returns is very good considering some of the other challenges in the stock market, but the opportunities have been higher in China. The only challenge for me is that I wasn't super comfortable investing in standalone Chinese stocks right now. However, with an ETF like this, price of $44 for just an average Joe investor like myself, you can essentially roll in here, buy 50 shares of this ETF, get a nice little chunk of the top performers in China for $2,000. And that $2,000 is getting in on the dip side. So you have to have a little faith and belief that the Chinese internet commerce will continue to grow. I believe that strongly. Do your own research. But even if you just get back up to 66, then you're talking about, whatever, roughly 25-30% gain. That could realistically happen by the end of this year just by getting back to par of where these companies were back in January. That's my thesis anyway. Do your own studies, look at your own stocks, make your own decisions, of course. But I'm really excited about this KWEB ETF. I encourage you to look into it if you're an ETF investor or if you're just interested in Chinese internet companies. Thanks for watching, guys. Please subscribe. Please like the channel. It helps out a lot. My name's Jeff Beers. We'll see you on the next video.